All right, we're ready to rock and roll for another weekly recap. This is Trader Travis. I have my partner and prophet Peter back from his, hiatus.
Hiatus.
Yep, enjoying his life, which I should, but I don't. But we are glad to have him back. And I'm going to put him to work this week, right? He took a break. Peter's going to take the lead this week, and Travis is going to sit back and do nothing. No, honestly, I don't have much to cover. I'll chime in here and there, but I have no content for you. Oh, one content I do have as an admin note is that next week is our last recap for the year. We are done after next week. We have our annual holiday break. We take a month off during December to, do different things, admin work, and just to take a break, take our annual vacation, and we start back up in January. And again, this will be the last recap for the public. Next year, I'll come up with something different, but we're going to move these recaps into the Success Academy for Success Academy members only. But for the people who have asked, Market Club Option members or people who aren't a member of our program but just love getting these videos each week, don't worry, I'll come up with something else for you. So with that being said, let me go ahead and turn the floor over to Peter and make him the presenter. I was about to dismiss you, Peter, by accident. I clicked the wrong button. All right.
Oh boy. My go-to-meeting is doing something funky.
Oh, that's fine. While you get that out, I have a personal request. Tim Ferriss inspired me about my baldness. He was like, the bald shine. I was like, he uses makeup on his bald head so that it won't shine when the lights hit it. And I was like, oh, I need that. So if anybody has any makeup recommendations, I can, dust off my little bald shine here. Let me know. And that's a weird, very humbling request. But I was like, hey, I've accepted. Hey, I'm going bald. It was a struggle at first, but it is what it is. There's nothing I can do about it. But yeah, if you got any recommendations on how I can buff up the shine so it won't shine so much when lights hit it, let me know.
That's funny.
All right. Yeah.
Tim Ferriss said this?
Yeah, he had a live Q&A and somebody asked him how did he feel about going bald and things, and he was like, honestly, it was a struggle. And he literally talked about it at length, and he talked about his makeup kit. His girlfriend found it, was like, will you be cheating on me? He was like, gentlemen, if you have a makeup kit for your bald head, please tell your girl, do not let her discover it because it causes all kinds of hell. It was funny. I was like, wow, he had never talked about the emotional issues he went through going bald, and he did take medicine and stuff for it, and it affected different things. He was like, it's just not worth it. He just went straight bald and dealt with it. So yeah. So anyway,
there's nothing wrong with it. I mean, look.
I'm glad you. Yeah, I was like, I'm glad you, Mister. You still have some hair.
Like, yeah, I know, but sometimes it's better to just either have it or don't have it. But
yeah, exactly.
I'll never do. The one thing I'll never do is like a comb over, though.
That's what he said. Combing 5 strands over. No, same here, yeah.
Hopefully I won't lose it all. But, all right, you can see my main screen?
Yeah, I sure can. Yeah.
Okay. Because, I don't know, GoToMeeting was asking something, and it's because, it might be because I did an update to my OS. So it could have something to do with it. But, all right, so thanks, Travis. Hey, real quick, I did want to just cover an admin note. I know you covered some. And this is for the folks that are not a part of the Success Academy, but still come out here and watch these videos. If you haven't subscribed to the YouTube channel, still subscribe. Just because we're not doing the weekly recaps doesn't mean Travis and I won't put other things out onto the YouTube page. So if you're not subscribed and you don't hit that notification button, you'll never know when we add new content. So be sure to subscribe. Click that notification button to get notified every time we add new content, and give us a thumbs up if you like the video. Comment below. We'd love to hear from you guys. So, and that is all I will say about that. So we'll come,
I said thanks for that.
Yeah, no problem. So I'll just cover the general market real quick. We talked about it 2 weeks ago because I wasn't here last week, but I was a little leery of the market going up because volume was a little lower. Volume kind of picked up a little bit, but not a ton. But the market is just going up. And a shout out, who was it? Was it Brian or Chris? Shout out to one of those two members because they were the ones that traded it based on a market club. They're like, hey, it gave me a weekly signal, and kudos to you guys for trading what you see, not what you think you're going to see. I wasn't not trading because I was expecting a crash. That's not why I wasn't trading. I wasn't trading because I just needed a break is really what I needed. Now, having said all that, there's something I did want to cover, and I like to refer to it as missing the boat. So I missed this up run, right? We're at all-time highs. I missed the up run because I'm actually in some trades which are doing well, but I'm not in SPY or the market per se like this. So am I going to jump in the ocean and try and swim after the boat? Absolutely not. You miss the boat quite often. I mean, it happens. We all do. So I just have to wait for the next boat to come into dock, and then I'll jump on board. So this gives me a good opportunity to start defining my trade plan for 2020, which is what I'm working on. And I actually just answered a question to a member, and I bet you, I was guessing, but I bet you I said Travis is constantly working on a trade plan even when he's not trading, and I bet he's working on one now. Am I right, Travis? Nope, I don't know where he went. All right,
sorry, I'm right here. No, I was like, I had myself on mute. I just shook my head. I was like, can't tell you. That's in my secret, top secret. Yeah, I'm always working on something. You're right. Yeah, I'm a nerd. I'm a money nerd. I'm always working on something, buddy.
It's, you know what, and it's just a matter of, this is, we talk about it all the time. It's like, hey, if you want to be successful at this, you have to treat it like you treat your job. You have to get up every morning. You got to go to it. You got to do the work. So there's going to be days when work sucks, and there's going to be days when work is fantastic. So usually, if you have more sucky days than fantastic days, you should look at getting a new job. But
yeah.
Anyway, so that's what the market's doing. It doesn't look like it's giving up anytime soon. So trade what you see. We're in November. So I'm going to trade what I see. I don't know what my next trades are going to be. I'm just starting to work on a trade plan for 2020. So my trades will be long-term. So there won't be any trades per se in November, December, because November was actually a very good month. And let me bring over my spreadsheet real quick. Make sure I'm on the right thing here before I bring it over. Okay. So you can see October was a month that really frustrated me for some reason. And it wasn't that bad of a month, $1,700 loss. That's not a bad month. It was more than that. I was at such a large profit and I lost it all. So that's what bothered me the most. So I kind of took a break. And November, I just had, these are really not me trading so much. These were trades that were already active and they're just paying out now. So one of the things you have to get used to with trading is it's not like work in this aspect of what I was talking to you about. You do have to get up every day like you do your job, but you don't get paid the same way. You don't put in 40 hours and get paid for your time. Sometimes you don't get paid at all. I put in a lot of time in October and I ended up owing money, right? That's how it works out. But November, I put in no time. I really put in no time, and it paid out $4,600 for November. And that's mainly because of this bottom one here, removal of option due to assignment. I was in the perfect position where I bought AT&T at a very low price. I was selling covered calls on it at the time because it was going down. And then AT&T started going up, which is ultimately not the best time to sell covered calls unless it's way above your cost basis and you're okay with losing the shares and just reacquiring them later on, which that's what I did. So it turned out to be what was going to be just a $500 covered call strategy for the month turned out to be a $2,500 strategy. So that worked out well. And the best part about it is I got paid the dividend before I lost the share. So you can see the dividend paid out first, and then the shares got called away for an additional $2,000 over what I paid for them. So that was good. So my November kind of took care of my October. And you can see I keep a percentage of what I'm trying to get, and I'm over my percentage. My percentage, my, baseline is, earn 1 to 2% a month. And if I can earn 2 to 4%, that's awesome. If I can earn more than that, that's ridiculous, right? So I always strive for ridiculous and usually end up somewhere in the middle. So that's kind of where I'm at with that. This is one of those things, though. This is where patience equals profits, right? I started this, how long ago, Travis? A year ago, right? And it's starting to pay off because everything I do from this point forward is just really free money, and my protection is already done and paid for, so to speak.
Yep.
Yeah. So this is just how you have to learn patience, right? One of the hardest things for me is patience. The last thing I want to just kind of cover, because I covered my AT&T, my SPY. Yep. Apple's been fantastic, and I know a lot of people. Where's my screenshot? Sorry, looking for it. There it is. All right, can you see that? So Apple is ranked number 1. Don't mind that black line. I don't know how I made that black line, but I made that black line, and I don't know how. It looks cool, but I don't know how I did it. But I just basically took a screenshot. I have an IBD subscription. So one of the things we do is what's called the hot stock formula, and I'm going to touch on that in a minute. But we look at stocks based on a rating system we use, which uses the IBD. So if you looked at Apple, there's a lot of people that are probably like, oh, now I want to own Apple because it's at a 52-week high. This actually wouldn't meet our hot stock formula, believe it or not. You see all the great things. I'm not going to tell you what our hot stock formula is, but it doesn't meet it. So if you're a member of the Success Academy and you were thinking about buying Apple, you violated our hot stock formula, and you should go back to the basics because you may want to think twice. I'm not giving you an investment advice, but for me, I look at it and say, well, it doesn't satisfy the hot stock formula. What are you pointing at your head for?
Because I was like, I violated it. I need to go back to the basics. I'll explain why later, but go ahead, move on.
Okay. So anyway, that was pretty much it. Now, I talked a couple of weeks ago about something I'm doing. It has to do with our hot stock formula and something I'm putting together. And I was looking to kind of launch that in like a month, and the timeline doesn't work. So I'm looking at early February to launch that. It will launch in early February. So the best way for you to know when that happens is to subscribe to this YouTube channel, because something will go out there. You can go to my other website, jpcashflow.com, subscribe to that. You'll get a notification there. If you're a Success Academy member, don't bother with this because you guys get this for free. We covered it in the last live call. But anyone else that wants to know, I'm basically doing all the legwork for you. I'm going to put out a spreadsheet of all the stocks that meet our hot stock formula, and basically that will go out. And I'm going to initially start it as a monthly, but it'll probably go to a quarterly because monthly can be a little overwhelming. So it may go to a quarterly. So stay tuned for that, but it will come out early February based on the timelines and how I'm working things. I'm running the hot stock formula now, but it just has to do with me getting the infrastructure in place for the website to be able to produce the product for you guys on a consistent basis. So that's taken me a little bit more time than I thought. And I think I covered everything. Let me just double check my notes, Travis. Yep, I did that. Yep, I did that. Okay, that's it.
All right. Well,
Why did you violate the hot stock formula? Did you buy Apple shares?
No, I bought an Apple call.
Yeah, well, yeah, but still, that's different.
Actually, no. I personally didn't buy Apple shares. My 7-year-old son did. So
that's awesome.
Yeah. All right. I'll explain. So first, why I was an Apple call. All right. So what Peter's talking about is we follow hot stock formula that allows us to add new stocks to our list, right? Hold up, I have a screen in my way.
Yeah.
So he was saying that it doesn't satisfy right now, so you wouldn't have added to your list. And so he was saying if you added it anyway, go back to the basics, because he's right. Apple's already been on my watch list for a while, so it satisfies it back in the past. And per my rule and the way I always taught it is you keep a stock on that list, until it becomes untradeable.
Right.
So although Apple doesn't satisfy it now, it was on my list a long time ago. And so I've always had it on my list, and it's still been tradable, so I have not stopped. And what that means is if it gets to a point where you can't find any trades, it just becomes too erratic, it drops to $5, that's like a definition of untradeable. You just can't find any trades on it. Now, as far as my son, while he owned it, he doesn't follow hot stock formula. It's a basic concept of we're investors versus consumers. If we're going to, and Tony Robbins said this, and it kind of stung when he said it. He said, if you own Apple products and you don't own Apple stock, you are a consumer. And I was like, he's like, it makes, and I was like, yeah, you're right. We're just spending money, but we're not thinking like investors. Our dividends and our stock profits should be paying for these iPads and these iPhones we have. So I taught them, don't be consumers. We go to McDonald's, any place we go, if we can buy the stock, if the stock is publicly traded, we will put some money in that. So our dividends will pay for our iPhones. It will pay for our coffee. We go to Costco way too much. Our dividends pay for all of our groceries there. We have enough in the stock. Disney Plus, right? If you own $5,000 worth of Disney stock, the dividend alone will pay for your Disney Plus subscription, right? I don't want to pay it out of my pocket. I'll let Disney pay for my own Disney Plus subscription, things like that. So that's why they don't own Apple stock. It's just a simple concept of we're buying their products, we're making that company rich, then we should get some of that money back, either through appreciation or dividends. So that's why. So, but what
yeah, and I should qualify that because Apple's been on the hot stock list for a long time when it first made it. It's never fallen off. Now, what I showed you too is Apple's still a very, very strong company. There's just a few things on that from our formula. We basically are picking the best of the best, right? And that's what the hot stock formula is doing, because it's giving you a better opportunity, especially when it comes to options trading. Now, having said that, Travis, what was your return on investment for your Apple call?
Oh, like 400%, something crazy like that.
So it's definitely, I should qualify. I just wanted to kind of bring that up because Apple's making a lot of headlines lately, and some people tend to jump into a stock when it makes the headlines, and that's usually one of the worst times to jump into a stock, because if you're not fully committed when Apple drops, you're going to be wanting to get out of that stock, and then people violate that very rule of buy low, sell high, because they bought it high, they can't stomach the downturn, and they sell it, which is why if you buy stocks for dividends, you don't have to worry about that.
Oh, that is what we talked about in another recap. We'll share it. I don't even need to show you screen. You can look this up. You can go to Yahoo Finance, look up AT&T. Matter of fact, I'll just show you. Let's just make this to be a reinforcement lesson. So we don't need to look up Earnings Whisperer. Earnings Whisperer is just a website I use to look up earnings for stocks. We don't need to do that. So I'm going to look up AT&T. And this is an old lesson we covered in another recap. What I want to show you is what Peter said. If you're wondering, why did Netflix fall so much when it's making money, right? The company is making money. So let me show you. Where is it at? Profile, AT&T Holdings. Here it is. It's in this quote box is in a way. Holders. Okay, this is AT&T. We want to look at Vanguard Group, and we want to look at how many shares of AT&T they hold. It's at 571 million, right? AT&T pays a very rich dividend. 571 million shares Vanguard owns. At the current price, AT&T's dividend is about 5% return, or your dividend yield is what they call it. So let's come back here. Okay, let's look at holders again, and 571 million shares. Now let's look at Netflix and see how many shares Vanguard owns of Netflix. It won't be 571 million, 35 million. So
33 million.
Oh, actually 33. I was looking at Capital Reach, 33 million. So that's conviction, right? Vanguard is telling you that they're more convicted with AT&T shares, 571 million versus 33, right? We can pull up Cisco, we can pull up all these dividend stocks, compare it to where they actually have their money. This is how you follow the money. Look at PayPal, great company, makes a ton of money. Sometimes I think it makes more than Visa, if I'm not mistaken. Look how many shares. 90 million. Okay, company's profitable. Nothing's wrong with the company, but look how many shares that Vanguard has in these two stocks versus AT&T. Now, let's pull up the chart. Let's look at AT&T. And if I pull up Apple, you'll notice the same thing. I guarantee they own probably some million. What is AT&T doing? Gone up. What is PayPal has done? Gone down. PayPal is making money, but it's gone down. Netflix, what did it do? Gone down. Why? And a stock is falling and you're Vanguard and you own so many million shares and it doesn't pay you a dividend and the stock is just falling, that stock is useless to me. It's just losing me money. It's dead weight in my portfolio compared to Apple or AT&T. Even if it falls, it's still paying a 5% dividend. I'm in no hurry to get rid of it. They keep it, right? They don't sell it off. So that's why when you put your money in these volatile stocks like Netflix and PayPal and Square, you're wondering why are they falling and not recovering? The market's at an all-time high because the stocks don't pay any dividends. Institutional investors are like, no thanks. Like they can, even if AT&T fell, which it did, AT&T stayed around $30 forever. Was institution?
You look at a 5-year chart.
5-year chart. Were they in a hurry to get rid of the stock? No, not when it's paying a 5, 6, 7% dividend. And if you actually take 571 million shares multiplied by the dividend, the amount of money they were receiving each quarter was insane, right? So if you're receiving close to $1 billion a year in dividend payments, would you get rid of that stock? No. But if I had $1 million tied up in Netflix and it's not paying me anything, would I get rid of that stock? In a heartbeat. And so I get rid of my Netflix shares, and it's what they call a rotating out. They rotate out of Netflix. They put their money in Apple, Disney, AT&T. You notice these stocks going up. You can spot when they're rotating in and out of stocks based on what the stocks are doing. Is a very common reason why they pay a dividend and they have a lot of products coming down the line. So institutional investors are rotating out of the riskier stocks and getting in the dividend paying stocks. Make sense?
Yep.
Okay, I didn't even expect to cover that today, but I hope that lesson was valuable for you. Along with the fact of Robert Kiyosaki's definition of, hey, an asset puts money in your pocket, a liability takes money out of your pocket. PayPal, Netflix, Square, they're not assets, right? They're liabilities. Why? They took money out of your pocket. They don't put any money in your pocket. They don't pay any dividends. So I struggle putting my money in a stock that doesn't pay a dividend because it's not an asset. That means the only way you make money is if the stock goes up, which then means that your investment strategy is based on hope. You hope the stock goes up, and hope is a horrible investment strategy. All right.
And your odds are horrible. You have a 1 in 3 chance of success because a stock only goes up, down, or sideways.
Yep, pretty much. So now I'm trying to think. I don't think we own any in our own personal portfolios. Nope. We don't own any stocks that don't pay a dividend. So it's like, I'm sorry, I'm just not doing it. I'm not going to put my money in something like that. All right. Oops. It doesn't matter. That was just trades for next year. All right. So next, before I let you go, I don't have anything else. Peter's already covered the market. We don't know what the market is going to do. The market doesn't care what we think anyway. So we don't play the prediction game. We have thoughts, maybe opinions, but I'm not about to put my money based on what I think. I'm going to always trade what I see. I see the market still going up. So I'm trading that way, which is why I got into a few more trades. The market falls from now. Oh, well, guess what? I've planned for that. That's part of what you should always do as an investor. It's like a pilot. I was talking to a pilot, one of my one-on-one clients, and I was like, you should succeed at investing better than others because you're used to checklists, right? No pilot gets to a plane and then leaves everything up to chance. Everything's planned out, good and bad. If the plane has an issue, every single thing is planned out. They have a checklist. They know exactly what to do. Same with investing. When we get into a trade, we should think through every scenario. What if stock crashes? What if stock goes up? What if stock stays sideways? Then we make plans and checklists based on if these scenarios happen, this is what we're going to do. Because if you're ever in a situation where you're investing and you're stuck with the what should I do now, you screwed up. That means you're not following a proven blueprint. You're not being a professional. A professional never says, what should I do? They've always planned everything out and have checklists. Why are you laughing at me?
I'm laughing because that's how I learned.
Oh, yeah. So what I have, go ahead.
I didn't expect that to lose money. Now what?
Yeah, exactly. So it's too late then. That's the sad part. It is absolutely too late. And when you try to fix it, you screw it up more. So Moving on. So what I'm going to end with this. I just have a bunch of charts pulled up. Secret is I'm in a few of these. I won't tell you which ones I'm in because I don't want people following me, but I'm just pulling up charts I found. I've been looking for weeks and I have not been able to find trades. And finally, like in 1 week, a bunch of new trades triggered. So we have Nike here, and I think these are all 1-year charts. Nike just triggered for a weekly trade triangle. Facebook triggered for a monthly trade triangle. Target triggered for a weekly. HD trigger for weekly, and I'm not saying these are trade recommendations, standard disclaimers. Everything we're saying is for informational purposes only. We're just sharing education and informational purposes only. And I'm not even saying all these charts look good. I'm just showing you all the charts I reviewed and went through my filtering process, and only a few of them survived, in which I placed trades on. All right, anyway, moving on. HG trigger for weekly. Visa trigger for weekly way back when. Roku trigger for a new weekly. Lulu, new weekly, Disney, new monthly. I think one more in here, LMT, Lockheed Martin, triggered for weekly. So those are all the charts I filtered and studied and went through earnings, all that. And a few of them I got into both for our case study for next year, as well as my personal account for the competition. So I think that's it. That's all I have for you.
How are you doing on your competition, by the way?
I just emailed the guy my performance last night. I'm up 30-something%, but it only going to report 27, I think, because of last month I was only up 27, but recently I had a few more trades. Well, the Apple one helped me. That was in the competition account. So that bumped me up to 30-something%. So I'm up 30-something%. So I'm keeping pace with the market, which bums me out, but it's fine. I'm still third overall, as far as I know. It's 90-something participants, and not a lot of people are reporting. So there may be some people up really high and just waiting to reveal it at the end. Yeah, dump it at the end. I'm like, yeah. So we'll see. So far, reporting wise, I'm third overall, U.S. Investing Championship for those who don't know. So we'll see. The guy says cool. I'm doing great. So hopefully, because he sees everybody's results. So I'm like, I'm barely keeping pace with the market. That's great. I didn't say anything to him, but in my mind, I was like, that's not great, but he sees what I don't see. So maybe other people are doing worse. So I don't know. So anyway.
Cool. It'd be interesting to see the results on that.
It will. And so for those who don't know, the U.S. Investing Championship, and I thanked him last night. I was like, I'm so sorry, forgive my bad manners. If you ever read the book Market Wizards, right? There are traders in there who competed or won the U.S. Investing Championship. This is the same competition. And so I thanked them last night because as a young kid reading that book, I had always dreamed of competing in that competition. 20 years later, I never figured I'd be presented with the opportunity. I never figured I'd be where I'm at. So that goes to show that you don't have goals and visions. Like people like, oh, it's like, I never knew I'd be where I'm at or successful as an investor. Wasn't even on my radar. Wasn't even part of my master plan, but here I am, right? So anyway, that's the competition I'm in right now, is that same U.S. Investing Championship. So third overall. So as long as if I end up in a top 3, I'm happy. Of course, I would love to win it, but I'm fine. Top 3 investors in the world, I'm perfectly fine with that. Heck, even if I hit the top 10, I'm fine. It's been a great honor and a pleasure to compete with the best investors in the world, like professional money managers, PhDs from Harvard, Stanford, all this other stuff. Me, this little hunky ghetto boy, grew up in the hood, live in Idaho. So I can't complain, right? I'm good. I'm good to go. I'm incredibly blessed, incredibly fortunate. So thanks, Peter. All right. Oh. Well, with that, everybody, I hope you enjoyed our recap. It was great to have Peter back with us. Next week, we'll have to come. Yeah. We'll have to come up with something for our last one for the year. Go out with a bang. So we'll see what we can come up with. So we'll see you next week for our last recap of 2019. All right. You all take care. See you next week. Bye-bye.